Good evening. Ira Epstein with your SPDR ETF wrap-up, and this wrap-up is for Monday, the 25th of April, 2022. Well, it's good to be back. I traveled in a car with my son. We drove from Chicago up to, there's a place called Mad River, California. And it is a camp for forest rangers. My son is a ranger. And what an event. I've never been there, and it's very, very exciting. Into the snow because he's so high up, and then I look up and these mountains are like mountains out of a movie. I've been in mountains, been to Colorado. These are monsters. And it's quite an event to go there. Should be an exciting life, I'll tell you that. We saw deer. I didn't see any bear, but they're all over the place. Wild turkeys, and then, as I say, you go up, and it's beautiful in one area, and all of a sudden you're in snow again. Snow's all over the ground, yet it's warm. It's such a strange thing. Very, very enjoyable. But I'm back. Long trip from that area back to Chicago. It's an all-day flight, so I was exhausted last night, but one more night of sleep and I'll be caught up. All right, so today was the Twitter day. So Elon Musk, congratulate him. He got what he went after. Maybe. There is a reason that Twitter didn't go to the full price of the stock. There's a risk factor here that the government may not allow this. You know, they haven't gotten the government approval. So just because you're going to pay the equivalent of, what is this, 44 billion or some odd dollars, doesn't mean that the government's going to think it's the right purchase. It's got to get through that. And that is the reason that the premium is still rich. In other words, you got 51.70, but the 54.10 hasn't been reached. If you think it'll happen, that's how you pick up another couple of dollars. If it doesn't happen, what does the stock sink to? Deal's not a deal till it's done. The board has agreed with it, but there's always twists and turns until the final money changes hands. If you take a look at the marketplace today, what went on? We were down sharp in the morning. I think you see that. And then the market came back. What happened is the market got word, proper word, that Beijing might go into the same form of a lockdown as Shanghai. COVID is spreading. Obviously, China's a draconian country. They don't understand modern science. Otherwise, why couldn't they, with the power that they have over their people, which is not a democracy the way we know it, just say you're all getting vaccine. If their vaccines work, do it. Buy vaccines that work if they don't. But no, that's not their solution. It's a mixture of vaccinations that apparently their own don't work very well. It's a combination of not declaring that order. And now what they go into is what they call shut-ins, where you go into regions, sections, parts of cities or whole cities, and you tell them they can't leave their apartment. They can order in food and medicine. They're not leaving. And then you put fences around it to keep them contained with the army. Imagine, this is a 25 million city, a size of people in Shanghai, and I had a bigger one in Beijing, if I understand that right. So when you're doing this, what happens to the economies? Well, there are factories, there's industry. This is not just commerce there of people buying groceries. There's a lot going on, and if you shut it down, what do you do to the demand for iron ore? What do you do for the demand for copper, silver markets, food? I can go on and on all the way through. Let's talk about oil. That falls off because industry's not going. I'm only talking those cities. If it's happening in those, what's going on in other cities? China's not open with us about everything that they do. I think you realize that. We look at their economic data. Nobody believes half the things that they put out. So that's pretty much what you're dealing with. But the market's got down to key numbers. If you're a student, as I am, of charts, and you watch where the Bollinger Bands came in, I got calls today, I'm back, Ira, what do you think down here? I said, it's a Bollinger Band. Take the name off the chart. Forget the world event. Are you supposed to cover shorts if you're short? Market came back later in the day. Doesn't mean the downtrend's over, but that's what you've got. Now, I want to finish up today with Twitter, but I'm going to rely on you. Write me tonight. As you watch this, tell me what you'd like me to cover the rest of the week. I want to drop Twitter. The most it's going is 54.10. If Elon Musk stays in the game, it can fall all the way back and fill a gap if the government, for some reason, doesn't allow the purchase, or there's some other event that happens I don't know about. All right. The trend is up. The bias is up. The market's fighting right now at the 200-day average. Where's the Bollinger Band? Guess what? It's at 54.04. It'll be a little higher tomorrow. It's right at that number. Game's over. Why are we still covering this? It makes no sense. I have to assume that in some reasonable period of time, this will go through. That's what I have to assume. As we take a look, though, at other markets to get a little more interesting, AMC. Now, I am the biggest bear you know on movie chains, but I also, because I owned one, understand the business. Starting in May, game starts changing again. And in June, you get the blockbuster movies. So just like you had Spider-Man and others, they'll come out at it. They've been saving the Tom Cruise movies, so on and so forth. I view this as a market that's going to look for a near-term bottom now. So as much as it's an embedded reading and all, when the red line gets over 20, I think the market's telling you might even put in a summertime low. Wouldn't surprise me, and then I think it'll fail again. But got to get to that point. I think that I stuck my neck out as much as anybody on TV and said, I don't understand why people just aren't. The company I'm talking, the director, selling more debt. This is a gift. These businesses stink. They have to find a different model. Maybe they're smart enough to do it. In Apple, all right, one of my good friends calls me and he says to me, hey, he's looking for another possible $15 down. This call took place, I think, Friday. I said, I've got problems with that. I understand what you're saying. However, I'm looking at a Bollinger Band. I'm looking at a 200-day average. I think the market, this is where the shorts are going to cover. If it goes lower, say la vie. Well, that was it. Now, he's looking to buy. I'm not looking to be a buyer. I'm a guy that's looking for where the shorts are going to cover because the market's under the 18-day average and the 100. Now, you're getting a bearish crossover in the market. The 18-day average is going to go under the 100 tomorrow. So keep your eyes on that. I'm not saying this has to hold, but I am seeing new resistance in that general area. In Disney, just keeps coming down. They have a massive problem in the state of Florida. They may leave. You know, once you take away the regional status, if you understand the taxes and what they were given to locate, and if that's taken away, does their business model work? I don't know if it does or doesn't. But it's also going to be a game of steroids between the governor and Disney. And obviously with elections just down the road, the governor's trying to make do for his name in the national running to be the Republican contender, right? He's no pal with Trump. He'll go against Trump for the nomination if he has to. Therefore, it becomes an interesting game, and one that Disney, when you deal with governments, it's like fighting the IRS. You rarely win. In XLF, you can see the financial services down, hit the band again. Each time you've hit it, you've had a nice bounce. Why wouldn't you get it this time? That's what you play. Now, there's a lot going on in the financial world. I've been writing about this in my newsletters. I'm already back and writing my letters. And warning. The market is pricing in for the Fed an awful lot right now. It has taken the market up dramatically on interest rates, especially in the front end, the 2-year even, and you have to pay attention to all that. And the reason is you might get what the people want, you know, a 50-point hike in May, maybe a 75 for June. Some are talking a 75 for July, back to back. But I think this whole process, and I've gone on record, is going to end way sooner than people think. And the reason is the economy's slowing down too much. If you looked at the Chicago numbers today, the Dallas numbers that came out today in the economy, they are in a state of really falling off the precipice. And if that happens, the Fed's job won't be to just say it's fighting inflation. Its job is also not to kill the economy. That would hurt the job sector. There's still 2 jobs open for every job that is taken. Remember that. But they have to be careful. That can disappear just like that. So you want to be cautious with it. I think that that's what we're looking at here, and I think that because of the way the curve yield's trading, the 2 10-years like 30 basis points now. Remember, it inverted for 24 hours, and then it went the other way. And we have the quiet period now where the Fed presidents no longer are doing what? They're no longer talking. They wait for the FOMC meeting. Obviously, if XLI gets a bounce, you're loaded with resistance at the 18, the 100, the 200-day average, but you're not in a trend. You're in a higher high, lower low, and again, each time you've been hitting this Bollinger Band, you come off of it nice and sharp, often a hard rally. Keep that in the back of your mind. Semiconductors, they're still embedded. As long as they're embedded, I'm in the bear camp. I'll turn bullish if the red line closes over 21, and then I'll tell you I think you're going to the 18-day average of closes. Right now, the market's getting sold on rallies until that particular configuration is gone. In the home builders, well, home builders got hit, but we're at that time of year where prices are, people are going to start buying. Now that the school years will come to an end, families that want to relocate have to do so. They'll pay up. They're going to do what they can. I realize mortgage rates are high, but supply is also shy for new homes. There are areas now, and I was reading, I loved driving with my son because I was able to read, again, I'm an avid reader, how many communities are now barring these big corporations to come in and buy everything in sight and then rent them out. Now some of them are getting smart and they're saying you can do that if you live in the house after a year. So you got to live in the home you buy for a year, otherwise you can't rent it out. Different ways to stop things. XLE, the energy sector, well obviously this is China. This isn't the supply of the world. Once you get past this hump of COVID, you're going to see demand for all this come back. So I believe this is an aberration. I do not think it's an end of oil demand by any stretch of the imagination. GLD. So how many times does gold kill you? Every time it goes up for a high and the traders come out bullish. If you look at the upper Bollinger Band on the futures, you went right to the top and you fell $200. Need I say any more? I didn't know it was going to fall from there, but I tell you, when you hit these Bollinger Bands and you're not embedded, if you've taken my enhanced Bollinger Band course, that's going to carry you everywhere you want. It's going to teach you, and you would have done that. What do you think you'd be doing on this down today? My course would teach you if you're short, and the trend has been down while I've been gone. This is a day where, the way I teach it, cover all shorts. That Bollinger Band's hit, out of all shorts. Not one do you hold on to. Not a trailing stop. You're gone. GDX, you've gone from the lower band to the upper band, back to the 18-day average, upper to lower. You know what I'm going to tell you? I don't care what it does down here. This is what I call overdoing it. I'm not bullish. It's just not a place I think that there's a good place to be short. Copper, getting hit. This is China. This is not about the demand for copper worldwide. This is the 50% of the demand of the market. 2 big cities now going to be shut down. These are the monsters. What about the other ones? Do you know what an average city is in China? 15 million is 10 million. I look at these numbers of cities. I've never seen anything like it. And you go to the metal areas. Knock on wood, they're okay, but the bigger areas aren't. And they're the ones sometimes you smelt in one area, you assemble in another area. There's a lot going on. This is what I think is hurting the market. And with XME, it'll be the same way. TLT, we're getting some short covering. Makes sense, right in front of the FOMC meeting. It's right around the corner. UUP, the dollar, right back to the upper band. Each time you've come back off of this, you're embedded, by the way. So the traders are buying the breaks. If you have my morning subscriber video, I will tell you. I know what I was telling people. They're buying the breaks, they're popping against the upper Bollinger Band if given the opportunity with a portion. Because you're embedded, you treat it different than coming out of everything. Want to learn more? It's so simple. Just take your cursor, go up here, hit the word, hit the icon you get. It'll be all about the research. You decide if any of this fits into your programs. I'm Ira Epstein. Good to be back. I'll see you all tomorrow.